Got it. Okay. Okay. So somebody said he can't hear me, but can everybody hear me? I think Manchin is saying he can't hear me.
Yes, sir. I can hear you, sir.
Yes, sir.
I can hear you, sir.
I can hear you. I can hear you, sir.
All right. All right then. Then Manchin, I think check your audio settings. Somebody should type in the chat for him to check his audio settings. Maybe he has not set his audio well. That is why. I hope my cursor is not lagging.
It's moving fine, sir.
All right then. That is good. So now, let me start with I think this guy was the one that asked the question earlier. I think that was okay. Ask me, John. Yeah, John, you can ask your question now, so that we start
Okay,
from
sir.
that. Yeah.
Okay, so my question is that I did a marking on the 15-minute time frame. So
Okay.
and I also did so when I did marking on 15-minute time frame, I now changed to the 1 hour time frame. So my question actually is the which of the time frame markings actually stand out or has the upper hand the most?
Good. Actually, the higher time frame always have the upper hand. Okay. But then, what you need to know is whatsoever you are doing, you need to know whether the higher time frame you are using, okay, is aligned with each lower time frame you want to make entry from. All right. So, for instance, if you are looking to make entry from 1 minute, okay, then you have to use 15 minutes, because when you use 15 minutes, then it means that whatsoever you are looking at on 15 minutes, 1 minute is going to respect it. So if 15 minutes is saying, okay, I'm bullish, 1 minute is going to align with it. All right, because the whole thing will take place on lower time frame, but at the end of the day, it is the higher time frame that will have the upper hand. Okay, the lower time frame will end up giving us what we call pullbacks. Okay, it will give us what we call pullbacks. For instance, let's take this GU trade here, for example. Okay, we can see that per our analysis, we are what? We have what we call what? A bullish trend, because here you can see we have a change of character here. Okay, we have a change of what? Character at this point, which means that we have shifted from what? Our bearish trend, and now we are looking at what? Our bullish trend. All that we need is for price to do what? To give us an area that we can what? We can buy from. And we know that after this, our inducement, the first area we will be looking at is our what? It's always our decisional OB. Okay, so if the decisional OB doesn't play out, which in this case, price only what reacted to what that area over here. Okay, that area over here. This area was our decisional OB. Price reacted to it, but then later price broke through it. So it means we'll be looking at what our extreme what OB, which is this point. Now, when price gets to our extreme OB, then as I said, I was feeling that price should at least sweep this liquidity. So this would have been my first entry, but price didn't do so. I made an entry from this area after I shift toward 1 minute. Now, 1 minute respected me because 15 minutes was higher than 1 minute, and it was my higher time frame I was using because I was doing day trading. Okay. I was looking, or let me say, I'm a short-term trader within the day, okay, not even the full day. So somebody might say a scalper or whatever you want to call it, but scalpers are unique. Those people can even use microseconds to open and close trades. Okay, they are just looking for their PIM. So they go in with their huge lots, and then within seconds. Once they see what they are looking for, they are out of the market. But this one, at least I hold the trade for some period of time, all right, before we close. So this one, as you can see, for instance, we know price is what is bullish, all right. But when market sweep liquidity here and it gives you some signal that can give you at least 1:3, you can quickly ping pong those entry. So I sold from this area on 1 minute. Okay, after we touch down here, I know we will have our reversal after the sweep occurred here on 1 minute. I took it, but then I know I'm in bullish, so I closed before I got to this level, which was my main entry, which I closed somewhere over here before targeting another buy from this area because I marked this area down. So that was the buy. If you guys remembered that, I came to tell you to keep an eye on the page. So now you see that though I was selling here, all I sold, but I was selling with caution. Why? Because I was looking at the bigger picture. Now on H4, sorry, H4 is the higher time frame overall. Sorry, I was using 15 minutes. Higher time frame overall. Now, when I go down to 15 minutes, I mark. That's why I have many markings here because some are 15-minute markings, whilst the bigger ones are the H4 markings. The smaller ones within are the 15-minute marking. Now, anytime I move from H4, I go to 15 minutes. Then 15 minutes, I go to what? 1 minute to make entry on 1 minute as 15 minutes becomes my higher time frame now. Okay, then H4's lower time frame entry point is 15 minutes, but I don't want to use 15 minutes to enter directly into the market. So I look out for the zones I want on 15 minutes based on 4-hour zone. Then I make my entry. That's what I do. So always the higher time frame have the upper hand on every trade that we take. Just that everything starts from the lower time frame, but always it has to respect the direction of the higher time frame because it is 1 minute, 1 minute, 1 minute for 60 minutes. That gives us what? 1 hour. You understand? So everything starts from the lower and then it accumulates to become higher. But at the end of the day, it must respect the direction that the higher time frame is giving us. John, is it clear now? Is John on the call?
Yes, sir. It's clear. It's clear.
All right, great. Now let's go on. The graphs. I think you were not in the meeting when we were having that of the Telegram meeting. I think you were not present. So the graphs, if you have any, you were
on
okay.
Telegram. Yeah.
Oh, okay. That means the name have changed. All right. So the graph, any question for? Okay, let me see. I think Clem has raised his hand. So let me start with him. Clem, you can unmute yourself. Yeah, we are listening, Clem. Can you raise your voice more? We can't hear you. Is that? Guys, can you hear him?
No. I hear Mato.
Clem, we can't hear you. Can you type your question for me? Can you type your question in the chat? Hello, Clem, can you hear me? If you can hear me, kindly type your question in the chat. Your line is breaking. Please, somebody should send screenshot to mention on the page. He's asking where he should click to activate his audio. Someone should send him a screenshot to direct him, please. Clem, you type your question in the chat, I'll read it and answer you. So whilst Clem is doing that, someone else whose network is good can unmute himself and then ask their question. Please, this questions and answer session. So tomorrow we will do the preview. And you guys saw the preview we did last week. All that I said play out. I told you how GU we are still going to see a push up after we come down. We will see a push up. And then also I told you same thing about gold, and you saw the same thing happening on gold. Yeah, Chizoba, you can unmute yourself.
Okay. Are you able to backtest? Please, I want you to show us your confirmation entry for some trades.
I think you have not taken the course, right? Because per what you told me on Telegram. So even if I do that now, you will be confused. You need to understand the whole concept.
Okay.
I will do that. Whatsoever I was saying, that will be tomorrow when we meet for the preview. I'll do that. All right. But then also, I want you to go and watch the course so that you'll be fully informed. So that maybe when I start and I say, okay, maybe we find a change of character, we wait for IDM before, or here we take risk entry using what we call the ping pong entry mode. You understand what I'm talking about? You get it? If not, you end up still asking questions that I've already answered in the lessons.
No, voila. Thank you.
Yeah. Okay. Me, I like calling people today. This evening they have been calling people. Ellie, ask question.
Okay, Prof. So my network is 7. I don't know whether you've already. I just joined again. So I want to ask that this marking you have on the H4, and we know that the H4 is a higher time frame. And since there are lots of imbalances to be filled, should this H4 give us the bias that markets will possibly sometime, and therefore any bearish signal we should see should be ignored, and then we should stick to the bullish bias, or in terms of bearish, we should stick to the bearish bias. Should we
All right,
do something like that?
Good. So I think I said a little about that, but I'll still say it. You said your network was
yeah, my network.
So I said when John asked about the higher time frame and the lower time frame, I used that opportunity to explain that. You see, when you use your higher time frame, it gives you the bias. Maybe let's say, especially daily time frame bias is very key, followed by H4, weekly as well, followed by daily, then H4. Then with 15 minutes, so let's say, for instance, here, I know from the review I told you when we're doing the preview, okay? Clem, I'll come to your question, okay? When we're doing the preview, I told you that GU has changed character, so we are looking at buying. So any sell I was taking, I was protecting my trades. I took shots all right on GU this week, but I was protecting my trade. Immediately they go into profit, at least 1:3. I close some position and I move my stop loss into profit. And you see that I'll come the page if I'm taking risk entry. That's why if I'm going against the trend, I'll tell you this is a risk entry. I'm making a risk entry here. And once it goes into profit 1:3, I come and tell you close some of your trades and move SL to so and so value, okay, or price level. Why? There are times short-term opportunities will come for you, though the bias is, let's say, bullish, but short-term opportunities will come for you to sell. All right. That doesn't mean that you should just be watching the chart just go like that. So you can take opportunity of those short-term entries. So I think, was it Thursday when we were doing this thing, I showed you this chart and I told you it was the one I made that loss on. But later on, because there was a level above, I still went in, and once price came to my 1:3 over here. I close positions and move SL into profit. So I lost this one, but I didn't lose the second entry. And see, because I closed I move SL into profit, though market reverse and continue with the buying, I didn't lose my trade. Why? Because I know that the overall bias is what? Is bullish. So yes, you can expect. So you see, this was my bullish trade. The first buy trade I took. A second buy trade, the first buy trade is somewhere here. It was somewhere here, yeah, over here. When I price filled this particular zone, this was my first buy trade in this area. Then this, my second buy trade. This one I placed the distance, so it's here. This one I took it directly on my phone. I didn't, so that's why I don't see this buy symbol there. All right. Then now, see, this guy, I held one position on this guy. I closed all other, once they hit here, I closed all other position. But because the bias was bullish, I was still holding one position on this guy until it got to, I placed it. Let me go to back to H4 so that I show you where I placed the final TP for that one position. I placed the final TP for that one position. Let me reset this. At this level where the break of structure is, because I know that is where we have our extreme zone. But I was expecting at least price to break structure because we are bullish. So I wasn't expecting this extreme zone to hold. So this is how you use your bias. You can take counter trades, but you have to be You have to be very swift with it. You don't stay long. When the buyer, that's why I said, even though you use 15 minutes as your higher time frame, always check bias on daily H4 to be sure to that you know the overall movement of the market or the overall direction of the market. That one is very important and key. Is that okay?
Prof, please, why did you say you were expecting that extreme zone not to hold, expecting a break of structure?
Yes, I was expecting a break of structure because I knew we are done, like we have switched from from bearish to bullish from here on H4. H4 has switched from bullish to bearish.
Yeah.
Then you see, I was explaining this, but I think, as you said, your network, so you went off. I was explaining that I was expecting price to even come lower, at least to sweep this low, so that maybe like we would have shifted this low to this side. But when price failed to switch here, I realized that no, the bears are now weak. So once we shift and we didn't end up even sweeping liquidity over here, I was like, no, now we can be expecting the market to push higher. And that was why I didn't mark this extreme zone even at all again. This guy here, I marked it because I was expecting that this imbalance would be filled, but I was not looking to trade it. I was not even looking at trading it at all. It is only there to serve as liquidity, and the name of that liquidity is SMT. If you remember what we learned. Okay, I told you that all the zones that are so this is SMT, at the same time engineering liquidity. Okay, because it is the one before the extreme zone. All right, so that is engineering liquidity, but we have changed we have changed trend. The only way I would have traded here is if candle body did not close. Let's say it went above, then it came and closed below this point, previous high. Then I will say that is a sweep of liquidity. Then I can take a short-term sell. But as long as that hasn't happened, there's no way I'm going to venture a sell there without having further confluence or confirmation. Ellie, are you okay now?
Okay. Yes. Because okay, I get it. So basically everything you are seeing on, even on the M50, you mark the H4 zone and then you on the H4. So your bias was highly bullish, but the sells were just short term.
Yes.
Okay,
That is why
because Friday. Okay,
that was why I was never worried that my cells were not hitting TP. If you watch the buys that I took for them, allowed them to hit TP, but the cells I was protecting at all costs because I knew
okay,
that bias is bullish.
okay. Because there's a similar thing, similar charts on EU, and then when price went to that extreme, I was expecting that price will react to that zone, and then on the M15 there was a sweep, so I got a short, and then I was taking out on that extreme zone. But the thing is that I had no market to see on the H4 to know that okay, this level is likely not to hold even on the higher time frame. So I've seen something. I've learned something.
Good. All right. So I think let's go to the chat. Clem has put his question there. Prof, I wanted to ask, you see your first liquidity, can we consider that as an IFC? First liquidity, is it up or down? I don't know which of them you are talking about. Is it here? If watch my cursor and type yes. Is it where the cursor is?
Yeah.
Yeah, that is why I mark it. You see that I've marked a zone there. It's because it's an IFC. That's why I mark it, because you can see it has swept this equal lows over here. And remember what we learned on during the lesson, when there is a sweep like this and you have this type of formation. But this one, I use the wick. Remember, I told you guys that if the wick is long, you can use just the wick as your IFC. You can see price came and tap into that, because the wick also serves as an imbalance. Clem, I hope you have been answered.
When we learned IFC, we said that the wick of the candle should sweep the previous low, like structural low, not candle, not based on candlesticks. So the low should be a structural low, and also the IFC candle. When we count 1, 2, 3, there should be an imbalance between the first and the third. So I was trying to apply those two these ones, and then first of all, that place, the sweep, the wick is sweeping the candles over there, and when we consider the 3 candles,
there is a valid pullback here. Clement, there is a valid pullback here. Look at this. This is a valid pullback. That was the low was swept to. This candle came to sweep this low before pushing up. You see, when we go down like this, we sweep up. That is a valid pullback. You know, we are in a downtrend here. Then we sweep. This is not giving us. So in terms of candlesticks, this is a structure. In terms of candlesticks, remember we learned 2 types of structure. That is where inducement comes in. The type of structure we use to confirm inducement is the candlestick structure, and then we have the overall structure. You get the point? Clement, are you following? And moreover, the imbalance you are talking about, I told you in the lesson that the wick, when we have a long wick like this, that is also an imbalance, and it is you can mark it as an IFC. The long wick, you can mark it as an IFC zone. Is Clem on the call?
Yes, please.
I hope,
so, Prof, so you mark on the 4.
Come again.
So you mark this on the 4 hour.
Yeah, this is on H4. Yeah.
Oh.
And then the smaller session you are seeing within it is on 15 minutes. This small one within this H4 is on 15 minutes.
Okay.
All the smaller ones you are seeing here are all 15-minute zones.
Okay. Okay.
All right, I can take just one more question because we have 8 minutes. Then we'll bring this question and answer session to a close. Tomorrow we have a preview of the market.
But please, a quick one. Please, you keep talking about the equal lows, like equal lows. When there is equal low, equal high, should you be expecting a sweep next, or how do you trade it?
Yeah, mostly once you see equal low or equal high or this thing, you see this kind of movement here, these guys, if you see them, they are always going to be swept. If not immediately, market will surely come back and sweep them in the future. That's why you see I always mark them. I mark them a lot over here. You see I mark them here. I always mark them over here. I mark them. They are very key. They are very, very key. Equal
Okay.
top, whether they are 3, they are 2, they are 4, mark it. It's always very
Okay.
powerful.
So you mark it and then you should be expecting a sweep sometime.
Yeah, you should be expecting a sweep, but then also be expecting be watchful to see if there are some valid zones above it or below it, because those will be the areas that price will sometimes after grabbing that liquidity will go and mitigate before reversing.
Okay. So if the body closes above, then you should be expecting the zones above them
Yes.
or below them. Okay.
Anytime body close comes in, then you need extra confirmation. But when sweeps come in, then you use the concept of single candle order block.
All right. Thank you.
You're welcome. All right, so
Okay.
we have.
Can I
Yeah.
ask a question, sir?
All right, so you'll be fast so that I can answer before the meeting ends.
Yes, it's about order flow, because sometimes when we are waiting for order block to be mitigated, once it mitigates the order flow, there's a reverse. So when trading the order flow, I'm looking at the maybe 50% or just on mitigation, if you can trade it.
I think I've explained this last time. When I even posted the video is on this thing. I was like how to trade order flow. After I took some trade, I came to explain during that afternoon. I had live session with you guys. I explained that yes, sometimes you only have the order flow being mitigated and then price goes. So the same concept we use when we mitigate order blocks, because order block is a refinement of order flow. Okay, so the same concept we use in trading order block is the same concept you use in trading the order flow. That is, we say once price taps onto the higher time frame order block, we look out for what? Our change of character. Then it depends. If it is a sweep, then we will look out. We don't need inducement before making our entry. But if it is a body that just mitigates the order flow or the order block, then we need to look out for inducement before we make our entry. So that you look for change of character with inducement, you make on your entry. But if it's a sweep, you look for a change of character, and then you make your direct entry when price reverse. Or if it is a flip method, you look for your flip, and then you mark your zone. If it is flip with inducement, that means you need to look for inducement before you make entry. If it is flip without inducement, that means you need to just make your entry once market reverse to the zone. So yeah, you can still trade order flow using the same entry principles that we learned for order blocks.
All right, sir. Okay.
All right, guys. I thank you for coming for this evening's live session answer a questions and answer session. I'll post the video on the channel. Do well to go watch it. Leave a comment, like the video so that others can also get access to it. I'll see you on the page, and tomorrow in the evening we'll meet for market review. So I'll schedule I'll send 3 different meeting schedule links. I'll tell you which one is first. So I'll label this is the first session, second session, third session, so that once it ends, we join using the second link, then third link, so that we can have maximum time tomorrow. Have a nice evening, everybody. I'll see you on the
All right.
page.
Thank you for your time.
Thank you, Prof.
Thank you, sir.
Yeah, you are all welcome.